What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. As always, we have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. The market continues to surprise people. We're just going to continue to focus on the technicals and which levels could be in play. If you want to get your mind off of what the market's doing, maybe you're frustrated by thinking it needs to keep going down. Well, first, I would advise you to just trade the chart. But secondly, we can get your mind off of that with 5 to 10 swing trade ideas that we send out every Sunday afternoon. That's the first link in the description. It's completely free. We're also on Instagram if you want to check us out there. It's at tradebrigade.co, and we do have a live Discord server if you want to chat with myself and other traders in real time. Starting off on our SPY weekly chart, as always, a few key things have happened since we last took a look. First one being that we have a clean break of our resistance trend line. That happened with price, not with time, so we can chalk that up to a big win for the bulls. You know, this thing didn't essentially just consolidate sideways and break the trend line that way. It happened on a clean price movement to the upside. The other thing that we can note is that we did break our double top, tweezer top, as well as that 200 SMA on the weekly in a clean fashion as well. So another check mark for the bulls. And lastly, we did start to form a new support trend line, which will become a little bit more clear on the daily chart. Another thing I want to point out is that although the volume is slightly lower, it is much higher than average if we look back to the past that way. The only reason these red bars are so high in volume is because there's a lot of panic associated with markets going down. People are very, quick to dump their shares when they start to see red, whereas buying back into a market that's recovering can go much slower. So that's the reason I want to point out this slightly lower volume, but still higher than average. And lastly, I do want to point out on the weekly that, it's just a little bit easier to see here. If we pull out the Fibonacci retracements, which we talked about when this move very first started to happen, we came right into our 50% retracement and stopped. We didn't see a huge pullback off of that level. We just sort of went right up to it, even went a little bit higher than it, and sort of are hanging out at that levels towards the end of the week. So that's noteworthy for the bulls as well. Dropping it down to our daily chart, again, you can just see how clear this break of the resistance was and how we can connect our lows to form this new uptrend support trend line. But I want to talk about the candle that formed on Thursday's action. Remember, we had a shortened trading week, so I'm not sure if this doji or indecision candle is just because people were packing up early or if it's because we're right at that 50% retracement like I noted on the weekly and we want to see some sideways consolidation before seeing our next move up. However, we did get a perfect gap fill where the low of Thursday's session was the pretty much on point with the high of Wednesday's session. So a perfect gap fill there. Structure below is pretty solid right now. The only gap is this one here, which remains unfilled at this moment. So we'll see what happens over the long period with that. However, I do think based on the shaping up of this chart, we want to see some sideways consolidation under that 50% retracement as we noted on the weekly, and then the next move is right up to our 288.20 resistance, which comes from in here, as well as that 50 SMA on the daily chart. That's going to be a key level of resistance. If we can break above that, then we're looking at 302.17, which is again going to be another super resistance where we have that 200 SMA coinciding with the price level. So keep that one in mind as well. If we can break above that 228. On the downside, again, I do think the next move is up, maybe some sideways consolidation, but we do want to hold on to this 275.17 support. If we break down below it, we are looking for a move back down to 263, which is very, very key. So a back test of that wouldn't be the worst thing in the world. We would want to remain above this support trend line that we have drawn in, so that could be a potential viable pullback. If we get lower than that, though, then I would start to get a little bit concerned, but our next support below is at 256. Anything lower than that, we have our triple bottom here around 244.50, and lower than that, I would say it could be potentially this gap fill here to our 228.22 price level. But again, look how far away that is as compared to our upward targets and potential for sideways consolidation here. So I do think the move wants to be sideways consolidation then up. However, we are covered no matter what direction the market picks. So the Qs look kind of similar, where you can see we do have a clean break in that resistance trend line. We have been trading above that for a little bit longer than SPY. We do have our support trend line drawn in. And one thing to note here is that we do have a flat set of highs as opposed to a higher high like we do on SPY. So sort of a pressure cooker forming. The more we can consolidate and touch that level below it, the more likely I think a break of that level will easily send us back up to our little gap fill up here and resistance area between 209 and 210. So if that gap fills, look for that to act as a nice little pullback area as well. Anything higher than that, do keep in mind that that 50 SMA is looming a little bit closer than what we have on SPY as well. That's about halfway between that range. But if we do get higher than this gap fill and the NASDAQ continues to rip to the upside, we're looking at 219.50 as our next resistance. Quite a ways of quite a range in there for our next point of resistance. So look for some intraday stuff to happen in between. But anything after that is going to be 223.83 on our next level. To the downside, if we see a break in this 198.30 support, then we're looking for a move back into our support trend line. Again, could be potentially viable on an intraday bounce or something of that nature. Anything lower than that, and we have 192.61 and 187.13. So keep an eye out on these levels, but especially that 50 SMA on the daily chart. Alrighty, so IWM continues to be the wild card. We thought it was going to go lower with these lower lows forming, but that was not the case at all. So we're going to get rid of these. And one thing I do want to do on this chart, just because it's so much different, is break out the Fibonacci's again. So if we look at the move here, you can see we're not even close to that 50% retracement. Instead, we're at the 38.2, which is another key resistance when it comes to Fibonacci analysis. So we're at that one now. You can see the chart here has a little bit poor structure below us. You can see a gap remains here. There's a gap here. So a little bit different than what we've looked at so far on some of our other indexes. But what we can see is that if we do break above this resistance here at this 124.20 level, quite a ways to go until we meet up with that 50 SMA and our next point of resistance. So you can see all the volume that's been coming in. Absolutely massive green days here. And another noteworthy thing to point out is that the range of the IWM is much greater than the range in terms of percentage than what we see in the Qs and SPY. So keep that in mind as well. If it continues to push up, I would imagine the whole market continues to push up. And again, like I said, plenty of room to run until this 136.20 level and 50 SMA start to act as resistance. We did close above our resistance trend line, so that's noteworthy. I think that's quite a stretch to happen in 1 week, but if we do go higher, we have resistance at 141 and then 145 to 19. To the downside, watching for any pullbacks. Again, we can draw in our support trend line that would look something like this. We're first looking for support to come into play at these highs and potentially gap fill here to 119. So keep that area in mind on the chart. That's 119. Anything lower than that, and then we sort of have this 117.25 based on in here. Lower than that, we're looking at some areas of support to come into play at 110.50. I'd say it's just slightly higher than what we have marked in the chart now. So we're going to go ahead and bump that one up. You can see it more coincides with some of these supports back here as well. So 110.73-ish, and that should coincide with our support trend line on the upside as well. So again, like everything else, potential buyable pullback there. Anything lower, we have 106. Lower than that, $100.27. So if you've made it to this point in the video, obviously you've been enjoying the analysis. Be sure to hit that thumbs up button. I really would appreciate it, and I think the YouTube algorithm would as well. Also, if you're not already subscribed, then what are you doing? Hit the subscribe button and turn on bell notifications. These videos drop every Saturday to give you an edge for the week ahead. So jumping right into Apple, you can see that we're continuing to put in higher lows. We have a low here, a new set of higher lows here, and we're continuing to make those higher lows as we continue throughout the week. That being said, we did have a lower high form, so our new resistance point is going to be up here at 271.50. I think, again, as long as the whole market continues on the path it's been on, we want to see sort of a bull flag form here where we see some sideways consolidation and then a breakout over this 271.50. Our next resistance point is going to be this 277.83 with the 50 SMA starting to coincide with it to form a super resistance as time continues on. So keep that area in mind as a target if we can break out over this 271.50. Anything higher than that and a break of that 50 SMA puts us up here around 286.46. You can see all the times we have support, support, resistance, and then resistance. So that area should act as a level. Anything higher than that, and we're really going back up to our triple, almost quadruple top up here at 303.73. Again, quite a ways away, but depending on how the market acts and how all these breakouts happen, it very well could be in play. To the downside, if we see any sort of pullback here here, or consolidation. We're looking again for this 262.50 area to hold. We really want to maintain above that to see this bull flag play out perfectly. But if we do go below, we're looking at our next support at 256.35. 200 SMA starting to coincide with that as time goes on. So look for a super support, first touch bounce in that area if that does happen. Anything lower though, 250.29, and below that, 245.16. Lower than that, and this is sort of our triple bottom area and plenty of support back in here. That's at 238.03. So Netflix is the closest of the bunch of stocks we watch to having a full V-shaped recovery. And what I've been really watching here is this sideways consolidation that really is just starting to look more and more like a massive bull flag, where we have, price comes down into our support level here at 361.79 and sort of bounces upwards. It can go down a little bit lower. We can see this is more of a zone to 356.84 as well. That 50 SMA was in this level acting as support as well. So really strong support here. But on the upside, the same thing, really strong resistance in this zone up here between 375 and 380. So just think of the breakout that could potentially happen here when we break one way or another. If we break out to the upside, think of all of the shorts here who have to then close their position by buying and sending prices higher. I think a breakout to 390, 295, so 393 just about could happen very, very easily. Anything higher than that, and we're really looking back at $400, the nice round number, and then really all-time highs. So beautiful potential there. And the same thing goes for the downside. If we break down to the downside, think of all the longs who will then have to sell to close their position, therefore forcing prices to go even lower. We have 343 as our next sort of support below. So I think the breakout here could very well be a large one, and I just kind of point out these targets to the upside just because I think that's just about double the range here that we've been consolidating in. So if you see something like this happening on another chart, normally a good rule of thumb is to do something like this, where we have a box, and when we break out of this box, we're then going to just about double the box to the upside, so a potential for a move like that. Or if we break to the downside, again, doubling the box to look something like that. So these are potential targets here on how we could break out of this sideways consolidation. Tesla, interesting as always. You can see that we do have the potential for a wrong tool. There we go. A support trend line to be drawn in something like this, so that will be paid attention to on any sort of pullback off of this level here. But the noteworthy thing is that we did break out and close well above our resistance point here at 558.50. That being said, I think the move is for a continuation to the upside to 609.25, our next point of resistance, as we can see in here. Anything higher than that, we're looking at the 50 SMA as well as sort of this price level over here, this double top-ish area, as well as act as support back here if you continue that backwards. That's at 666.19, so what a number there on this holy weekend, but that is our next point of resistance. Any sort of pullback, like we said, we're looking for a break below this 558.57, and we're looking for support to come into play at 516.45. All these touches in here and consolidation, nice price congestion should act as support. Also, that's going to coincide with our new support trend line, so that could be a potential viable pullback. Anything lower, though, we have our levels mapped out, 490, 469, 470, and then 447.21. Alibaba looking pretty good. Although these are 3 red days, they are 3 red days of equal value just about. You can see we didn't really make a larger move to the downside. We just sort of went sideways. So that to me is a strong signal of, again, consolidation, and prices want to sort of figure out and determine whether or not they want to go higher. If we can break out over this key level here at 202.05, which is coinciding with that 50 SMA on the daily chart. Again, key super support there. A first touch to it should act as a pullback. You can catch a nice pullback off of that, and then it might break. But if we go higher than that, we're looking at some pretty choppy action up here. But the thing that sticks out to me is this clear double top here, where we got rejected and then rejected, and that's sort of where this move sort of stemmed from. That area is at 207.50, so that is our next target above. Anything higher than that, and we're looking at our resistance trend line to come into play. To the downside, if we see this sideways consolidation break down, we're looking at key support where these 2 tails are, not really where this level is here at 195, but it's more around 193.90, 194 if you want to call it a round number. If we see a breakdown of that, we're looking at a move back down to our 200 SMA or potentially 187.72 level of support. Anything lower is 185.50, lower than that, and we have 180.62. Facebook's looking pretty good. Again, we can see just the clear higher highs and higher lows forming here on the last 3 days of the trading session. The other thing to note is that we filled the gap here, so there is some pretty decent structure below us here on Facebook. Next thing we do want to see is a breakout over Thursday's high, and that's at 177 just about. If we can break out over that, again, next move is up to 183, 184 just about, whole number coinciding with that 50 SMA as well. Anything higher than that, and we have our 200 SMA, which will act as resistance, and higher than that. We sort of have this double top in here at 197, higher than that, 203.63. Again, these are just levels that could potentially be in play. I think the next move is some more sideways consolidation, or potentially a breakout over this 177. But if we see a move to the downside, again, looking for support to come into play here. Key level at 170.25. You can see touch, and then in here as well. So that is a level to pay attention to on the downside. If that one gives, we're at 163.79, and then plenty of levels in here. I'm not going to list them all out for you, but you can just see all the times all this stuff has acted as support and resistance. Nvidia, again, just sort of forming a bullish flag or just a flagging pattern here where we see a move up and then some sideways consolidation. Obviously, we have this triple top-ish area forming on the chart where we have touch one. This one went notably higher, but on a gap up there. And then a resistance point here as well on Thursday's action. So that's at 273.23. If we get higher than that, then again, we could target this area as a first sort of hiccup, but I think the next major point of resistance will come into play at 286.16. So keep that in mind if we can break out over that level. Anything higher than that, and we're looking at 295, higher than that, and obviously our all-time high is way up here at 316.32. To the downside, we have clear support at 262 just about. Anything lower than that, we have our 50 SMA starting to coincide with this 255.25 level, so super support there. Should act as a bounce point on any intraday first touch. Anything lower, if that one gives, nice flush point there with all these data points. So if it gives a clean move down to 241.25, should be in store. You can see how strong this support is with the triple bottom here, as well as some price data in the past as well. If that one gives, again, plenty of pressure building up above it. If it gives a clean move down to 228.03 would be in store next. So Microsoft getting pretty close to its resistance trend line. I think the next move is to go up and at least test it. We are finding some strong support at that 50 SMA as well as just above this price level here at 162.50. So again, I think the next move is to at least test that resistance trend line. If we can break out above it, our next point of resistance is up here at 174.21. Higher than that, and we have 177.21 as well, and that's a gap fill on the chart. If we look back to our left, anything higher, and we have our next resistance way up at 187.75. To the downside, if we do see this 50 SMA give and not hold, we're looking for a move down to 162.50. Anything lower than that, we have our next support point down below at 156.47. Lower than that, 150.80 and 147.13. But again, based on the sideways consolidation, the bull flag nature, the new uptrend that's formed, I do think the next move is a test of this resistance trend line. Amazon just forming more and more of a V-shaped recovery here. You can see we're right back into this gap fill territory, which is noteworthy. So the next point of resistance and area that we would expect price to go is to fill the gap at 2086.37. That being said, look for a gap fill reversal off of that level, at least some sideways consolidation below it before making another move up. The next level to the upside is obviously this all-time high way up here. That's at 2183.33. So don't you wish you loaded up your retirement account down here? Yeah, I certainly do. Anyways, if we see a pullback and the gap not fill, let's say we see a 50% gap fill and then a move back down to the downside, our support is in here at 1995.34, but I would imagine that the 2,000 whole dollar mark acts as some sort of psychological number intraday when we start to come back down and test it, if we come back down and start to test it. Anything lower than that, and we have our key level here, all these touches. This is at 1957.41, 50 SMA coinciding slightly with that level, so look for a super support there. If that one gives, we are looking at 1894.50. Alrighty, so that's going to do it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section, or if you disagree with some of my analysis, that'd be a great place to talk about it as well. Again, if you leave the video a thumbs up, that's just another way you can communicate to me that these are of value and you enjoy them. Feel free to subscribe. These videos come out every Saturday to give you an edge for the week ahead. And check out the Instagram page. There will be a contest coming out soon for a one-on-one call, completely free. It's going to be a little contest, so go ahead and again, check out the Instagram Instagram page. It's at tradebrigade.co, and it is linked down below in the description. I hope you all have a good weekend, a good long weekend that is, and I wish you a green trading week.